The XRP community woke up today to one of the largest on-chain movements we've seen in months. Data shows that in just a single day, more than 1.2 billion XRP tokens moved into exchanges. The biggest transfer came from cold wallets in Binance, where over 610 million XRP were injected. To put this into perspective, that's nearly half of the entire amount transferred in this unusual event. These aren't retail trades. No individual investor is moving hundreds of millions of tokens in one transaction. These are whale movements, most likely tied to institutions, banks, or large players with direct exposure to XRP. Whenever this type of activity occurs, it raises a red flag. Why are so many tokens suddenly being moved into exchanges? The most common reason is liquidation. Typically, when holders plan to sell, they transfer their tokens from cold storage into exchanges. That doesn't guarantee an immediate sell-off, but it often signals preparation for one. So, is this the prelude to a wave of selling that could put downward pressure on XRP's price? At first glance, that seems to be the fear, but the reality is more complex. Despite the massive inflows into exchanges, XRP has remained resilient, holding its ground above $3. Even with potential selling pressure looming, the token hasn't collapsed. This suggests that demand is matching or even absorbing these inflows for now. And there are larger forces at play that may help explain why XRP continues to find support. Let's zoom out to the broader markets. In the United States, equity markets just witnessed a record-breaking day. More than $445 billion was injected into the stock market in a single trading session, pushing the S&P 500 to a new all-time high of 6,587. History shows that when that much liquidity enters equities, a portion often spills over into crypto. Investors diversify, rotate profits, and chase alternative assets when traditional markets are strong. That means the capital surge we just saw in stocks could soon provide fuel for the next leg up in crypto, potentially offsetting any short-term selling from whales. There's also another piece of news that changes the narrative. BlackRock, the world's largest asset manager, has confirmed that it is actively exploring the launch of tokenized ETFs directly on blockchain networks. This comes just days after Nasdaq revealed its own plans to tokenize U.S. stocks. Together, these announcements confirm that tokenization is no longer speculation. It is the next frontier for financial markets. And among the blockchains being considered, the XRP ledger is front and center. Its speed, regulatory alignment, and efficiency make it one of the most suitable platforms for tokenizing real-world assets, from stocks and bonds to ETFs. If BlackRock or Nasdaq move forward with XRP ledger integration, the implications are enormous. We're talking about trillions of dollars in traditional assets being represented on-chain. And if XRP is the bridge asset in those transactions, the volume and utility flowing through the network would transform its market position. Another interesting data point comes from wallet distribution. According to the latest on-chain analysis, to be in the top 10% of richest XRP wallets, you only need to hold 2,396 XRP. At today's price, that's roughly $9,000. This means that joining the exclusive tier of large XRP holders is still surprisingly accessible. For long-term believers in the project, it reinforces how early we still are. Less than 10% of the world's population owns crypto, and among those who hold XRP, the threshold to be among the top wallets remains attainable. So what does this all mean for XRP in short term? On the one hand, the massive transfer of 1.2 billion XRP into exchanges should not be ignored. It's a warning sign that whales may be preparing to sell or rebalance. Such events often precede volatility, and investors should be cautious. On the other hand, the resilience of XRP's price, the injection of hundreds of billions into equity markets, and the groundbreaking institutional moves from BlackRock suggest a more optimistic outcome. If even a fraction of BlackRock's tokenized ETFs are built on XRP ledger, the long-term demand could dwarf any temporary whale selling. It's also worth noting that whale transfers don't always equal liquidation. Sometimes, tokens are moved for restructuring for internal exchange needs, or even to prepare for large-scale staking or lending operations. While many in the community fear liquidation, others argue this could be positioning ahead of major institutional announcements, particularly with tokenization entering the spotlight. From a narrative perspective, this event arrives at a critical time. The XRP community has been debating when institutional adoption would truly begin to materialize. With Nasdaq and now BlackRock signaling their intent to tokenize, that moment may be closer than ever. If XRP Ledger plays a role in these developments, the long-term trajectory for XRP becomes much stronger, regardless of temporary whale moves. In the coming days, investors will be watching two things closely. First, whether the 1.2 billion XRP moved into exchanges actually starts to flow out in sell orders, pushing down the price. And second, whether we see confirmation from BlackRock or Nasdaq about which blockchains will host their tokenized products. These two factors, short-term whale activity and long-term institutional adoption, will determine XRP's next move. The takeaway for now is this. Massive movements like these create fear, but they also highlight the scale of players involved in XRP. Retail holders don't move billions of tokens. Institutions do. And when institutions are active in XRP, whether selling or preparing for adoption, it means the token is already playing in the highest leagues of finance. So is this a sell-off warning or a sign of bigger things to come? Time will tell, but the evidence suggests that XRP's story is only just beginning.